How to finance a franchise in 2025 and beyond. Tips and tricks for SBA financing. Let's get started. And so that's what we do at our firm. We help people find and fund their ideal business. Now, every bank utilizes the SOP from the SBA for guidelines, but each bank overlays. Every deal without real estate is going to have a collateral shortfall, because even if you have a lot of heavy equipment and you're buying new equipment, that equipment, they're only going to give 50 cents on the dollar or less. So if you want to find and fund your ideal business, get a game plan. That's what we do. So in today's episode, we're going to dive into the trends I'm seeing in the franchise space. Most of the banks I'm working with on the loan advisory side via SBA financing, they're completely booked. They're swamped. There's lots of people getting into business ownership right now. And I think those trends are going to continue to stay. And people like franchises because it's processes, systems, right? They're leaving corporate. They don't want to buy an existing business. They need a little bit more support. And with a franchise, with the right franchise at least, you're going to get marketing support. You're going to get a coach. You're going to get sales and leadership training. So many people are looking at franchises as the most viable option for them to get into entrepreneurship, not alone. And I think that trend will continue. We're seeing a big uptick in home service business models. There was that article a couple of weeks back in the Wall Street Journal talking about the new wave of millionaires are people that own HVAC and plumbing companies, right? The home service industry, the boring businesses. And so that's what we do at our firm. We help people find and fund their ideal business. And we have this channel where we talk about all things SBA financing, franchising, business acquisition, hospitality deals, real estate, and entrepreneurship, and more. So what trends are we seeing? Look, there's a handful of really good SBA banks that we work with, credit unions and non-bank SBA lenders. Not every bank has an appetite for franchise startups. And so they got rid of the SBA directory, although banks still look at the directory to see if it was an approved franchise or is an approved franchise back when they stopped. So the directory is still up. Now, banks have all different rules of what they'll do and what they won't do. We're seeing a lot of emerging franchise come in and they don't have many units, right? So for example, there's a new emerging franchise and they've sold 45 locations, but they don't have anything on their franchise disclosure document of any open locations except for a corporate or flagship location. That makes it a lot more challenging because if they're not on the SBA directory, there's also a cert called the FranData cert, and FranData pulls and they score different franchises. I don't totally agree with the way they score these franchises. I don't know it completely. I'm going to dive into it more, but even some really established franchises don't score well. So I don't know if that's the best option either. Personally, what I think should happen is that you look at the deal just like you would look at any startup, right? Obviously, if it's an established franchise, you give it a higher score because they've been around and they have 200 or 300 locations and they have, a low default rate, good retention, versus somebody's getting into HVAC. Now, what you see a lot in franchising is people that are entrepreneurs or are aspiring entrepreneurs. They buy into like this HVAC company. They have no trade experience. That's the beauty of a franchise. The problem is that SBA underwriting wants to see relevant experience unless it's an established franchise, right? So that's where the conflict comes in. So are we able to get those funded? Yes, there's still makes sense underwriting, right? Now, every bank utilizes the SOP from the SBA for guidelines, but each bank overlays. I call it an overlay. It's a common term in conventional lending. I use it here in SBA and business lending. What are the compensating factors? The strength of the borrower. If the loan amount's over $500,000, guidelines state they have to look for additional collateral, and they will put a lien on a property if the loan amount's over $500,000. Now, even if the loan's under $400,000 or $500,000 today, banks can also say, "Hey, we'll do this loan, but we're going to put a lien on your property." So it's up to the bank. So you can argue with them and go elsewhere if they try to do that, because some banks will try to take collateral because got to think. Every deal without real estate is going to have a collateral shortfall, because even if you have a lot of heavy equipment and you're buying new equipment, that equipment, they're only going to give 50 cents on the dollar or less. So you're going to have a collateral shortfall. So that's what we have to consider when we're looking at these deals. So what we do is we help navigate the waters, figure out which bank, which credit union, which non-bank SBA lender will be the best fit, whether it's a franchise startup, franchise resale, business acquisition, and expansion. SBA really is the best tool out there to grow wealth if you strategically use it. I'm looking forward for SBA 7A loan to go from cap of $5 million, and I'm hoping in the next 12 to 24 months that they raise that to 10 million. I don't know. I don't have a crystal ball, but I do think we're due because they haven't changed the loan limit since 2010. So lots of things happening. The guidelines are changing often. There's updates to SOP, and there you can do partial buyouts. There's a lot. Look, I see these deals. I get these deals done where they're buying $1 million business. The bank's going to lend 90% or 900,000. You need to bring in 100 grand or 10% equity injection. That can come from an investor partner that owns less than 20% of the business. They don't have to be a guarantor, or the seller can carry back some on full standby. So some banks are okay with as much as 7.5% of the 10% that's needed for the equity injection being carried back on full standby from the seller. So you just got into this $1 million business for $25K out of pocket. So really, it's a beautiful thing because we're talking about a business acquisition with no real estate, no collateral. So what does that mean? Is that easy to get? Well, relatively easy if you have good credit, if you have outside income that supports outside debt, and if you have a decent resume. Then actually SBA financing is rather easy. Is it a lot of paperwork? Yes, a lot of back and forth. But if you check the boxes, you're going to get SBA financing, right? And got to be either a U.S. citizen or a permanent resident. And if you fit those boxes, perfect. There's also other programs that are government guaranteed, like USDA BNI. That's if you're in a designated rural area. There's a mapping system we use, and we can do loans up to 25 million. You need to have a 1-to-1 collateralization on that, so it's got to be a real estate type deal. But that's a great product for those rural communities. There's also state guarantee programs. So there's a lot of state guarantee. Not all states have them, but those are lookalike SBA products that also have value that SBA loans might not have. So sometimes we can navigate into a state guarantee program. So basically, there's a lot of options out there. SBA financing is one of the best financing tools to grow your wealth, to buy a business, to get out of the day-to-day grind of a W-2 job. So I think these trends are here to stay. We're going to see a lot more franchising, a lot of movement into look, it's not all about home service as well. There's B2B businesses, there's QSRs, quick serve restaurant type of businesses, lots of businesses out there. So if you want to find and fund your ideal business, get a game plan. That's what we do. We'll help you get a game plan. We'll use some profiling assessments to figure out what businesses would be a good fit for you. So anyways, go to bookwithbo.com. Thanks for watching.
Are you ready? It's time to get the tools, prompts, and guidance you need to scale your business. With my team of VAs, my calendar stays full with qualified appointments. Now I want to help you do the same. Hi, I'm Bo Eckstein, and I've put together an exclusive ebook that will help you supercharge your productivity, scale your operation, and close more deals using virtual assistants and AI. Here are the key points you'll discover: productivity boost, scalable systems, and how to close more deals. In this free ebook, you'll discover proven strategies I've used in my own business. Strategies that have helped me go from doing it all myself to building a high-performing team that runs like a machine. Get your free copy now and unlock the secrets to growing your business faster than ever before. Please visit bizscalingplaybook.com.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.